to Bitcoin ETFs, the NYSE has filed its 19B4 applications for listing and the trading of options on commodities-based trust shares, which would be the Bitcoin ETFs. So they've filed for this with the SEC, and they've basically said that we want to start trading options on this. Now, what does that mean when you can trade options on a Bitcoin ETF? What does that actually mean for the asset? What does that mean for the asset holders? What does that mean for the type of buyer that's coming into the asset as a result of the options? Because the derivatives markets are orders of magnitudes higher and bigger than the underlying spot markets. So as these options get approved, you'll be able to come in and write covered calls against your position. You'll be able to come in and buy long calls against your position. You'll be able to come in and speculate around the underlying asset. And options are obviously, it's their own market, but it has a link to the underlying spot because of where the market's intention and desires are based on the options trades that are going on. So you will have a ton more liquidity coming into the space just by activating options. It's one of the reasons why I have been waiting to liquidate my GBTC position, and I may not even liquidate it, because if I can use options to generate a cash flow from my GBTC position, suddenly the fee is less relevant if the liquidity is higher and the premiums are higher on the GBTC position. So that's one of the things, one of the reasons why, the type of buyer that's coming in is interested in cash flow. And the biggest argument that Bitcoiners have not been able to fulfill is, what about the lack of cash flow when it comes to Bitcoin? And with the options coming to Bitcoin, it might not be right for retail, but for the professional market, for the market that understands, how liquidity works, how options work, how derivatives work, this is basically opening up the derivatives market for the underlying Bitcoin. Now, you could say, yes, you could have been doing this in futures, but futures, are slightly misunderstood. What people want to do is buy an asset, and they want to sell a covered call against it, and they want to make their 2%, and they want to hold on to the underlying asset as well. So in the months that they do well, they make a 2% cash flow. Like, if you've got $1 million worth of Bitcoin in an ETF, and you can write a covered call against it, especially with the premiums the way they are, you might even be able to generate a 2% a month return without, most months, right? Because if the price spikes up, you need to close your position. But you might be able to generate a 2% return without letting go of the upside on the market. So, and this would be extremely handy in the bear market. Imagine you've got $1 million position in Bitcoin, and you can generate 24% a year by writing covered calls as the market is trending downwards. This is huge for the market, especially. This is why the first thing that Grayscale did was file for a covered call ETF, because that will make people that want cash flow excited for what's going on here, because they can finally own Bitcoin, the best performing asset in the world, and have a cash flow dividend payment from it too. So the type of buyer that's coming in is now going to dictate the type of products that start getting issued here. We've already seen a slew of filings for leveraged ETFs on both sides, inverse and standard leveraged ETFs on Bitcoin. Now, there's going to be a lot of people that say this is bad for Bitcoin, but this is what happens when an asset gets securitized. The leverage is going to come, and Bitcoin is the most pristine asset in order to do this with, because I don't have to worry about whether someone's going to look after it or not. I don't need to worry about where the location of it is. I don't need to worry about any slippage, like, do I need to get the roof paint done, or do I need to get the walls painted, or the carpets changed, or is the CEO a moron, etc., etc. I don't need to worry about none of that. All I do is, as long as I have the Bitcoin that's stored in the ETF, I can sell options against it or buy options against it and start speculating on it. It is a pure capital. So that market alone you're talking about adding maybe, I don't know, like, if there's $1 billion in Bitcoin, you could have up to $15 to $25 billion being traded on the derivatives markets of Bitcoin. And I'm not talking about like in the next year. I'm talking about over a period of time as we go through this adoption phase. You could basically have, 15 to 25 times the amount of capital that's holding the underlying Bitcoin, speculating around it, which will drive the price up as well. And all of that capital doesn't ever have to even go into the underlying asset, which is what, a lot of people are mistaking. Like, yes, you have the bull market multiplier. And by the way, I'm going to do a couple videos on the bull market multiplier in this price dump that we've had. So please subscribe for that. I'm also going to do a video on how I have been selling Bitcoin basically to the people that I care about. I'm going to walk you through exactly like my thought process on what people need to understand in order to get that asset, and have the desire and the willingness to put a small percentage of their portfolio, if they've got a portfolio of traditional assets, into Bitcoin. So subscribe for that too. This is a big development here. Now, this is based on the Bloomberg analyst. This is going to take 2 to 3 months to play out. But once you have options on these assets, you open up a whole other different type of buyer. You're now opening up a cash flow investor. You're now opening up all of these investors to come in. And again, it might not be retail, so you might not be excited about it because it's too complicated to figure out for most people that are in retail, because the only time you hear options is when you want to speculate or when you want to trade. But options can be very, very useful for hedging. Options can be very, very useful for generating cash flows. That's what options can be useful for, and now they're coming. You've seen now that this filing has gone through. One of the ways that makes an asset manager feel comfortable about getting their clients into Bitcoin, more riskier asset managers, is, well, let's say I put in $10 million into Bitcoin. It's now worth $40 million. How do I hedge that, right? How do I hedge that profit? And then you couldn't do it up till now. Now that you have the ETF, you put the money into the ETF, you write up that profit. You can take 1% of the value of the position, and once the options are available, you can buy puts at the market to hedge the downside, so that if the market turns into a bear market, you're now going to be hedged to the downside and your account value remains the same. This is all very exciting conversation for asset managers who have these responsibilities, hedge funds, etc., etc. They want to hedge. They want to be able to have the opportunity and the instruments to hedge, and now they're coming into play. So this is super exciting. Unfortunately, at the same time as being exciting, you're now seeing that all of the ETFs that are out there almost control, the 9 new ones almost control 35,000 Bitcoin in 3 trading sessions. 35,000 Bitcoin in 3 trading sessions. Imagine what's going to happen. Yeah, it will slow down over a period of time, but imagine what happens over 6 months. Imagine what happens over a year. Imagine what happens in a month, let alone 6 months, right? So this is extremely exciting, and even though retail basically looks at the price and says, "Oh, nothing's happening," and that's how you might be feeling as well. Certainly, I know there are a lot of people that are feeling like that. Oh, nothing's happening, but the institutions are sucking up and hoovering up all of this Bitcoin, and that will never ever see the light of day. Then I told you, the new buyer that's coming into this space is very different to the old buyer. They're not coming in looking at price. They're coming in because they need to make a 1 to 5% allocation of their portfolio, because their asset manager at BlackRock phoned them and said, "You need to make a 1 to 5% allocation in Bitcoin in this new thing." And they said, "Okay." And that's it. They don't care about any trading. They don't care about any of that. They're buying and holding forever. So all of this Bitcoin that's been dumped onto the markets by the miners, by GBTC, by everybody else, by all the short-term speculators that were out here, this is all being bought up by people that are never ever going to let go of it. So it's going to get tighter and tighter, and on top of that, you're now going to launch options in 2 to 3 months and have the ability for the cash flow investors to start coming in. Now you can have income funds suddenly start investing in Bitcoin, because they can generate an income by using covered calls and using other things, other option strategies to generate an income on top of the Bitcoin. So Bitcoin is now, again, it's going through that phase and that step-by-step phase of being securitized, and this is completely normal. This is completely expected. None of this is out of bounds here. This is exactly what should be happening to Bitcoin at this stage of its development. And if you're sitting there going, hey, I'm just going to still wait because the price keeps going down, there's going to be a day where you run out, right? I don't know when that day is going to be. And of course, I made a prediction around what we'll see in the first week of trading, and I'm going to do a video whether I was right or wrong on that by Friday. So subscribe for that too, and we can have a conversation about that. I think I'm going to be wrong, right? Based on the flows and everything that's been going on, I think I'm going to be wrong, but we'll see. We'll see on Friday what happens by that. And again, I'll do a video talking about why I was wrong, if I was right, why I was right. And so please subscribe for that. And ultimately, stop listening to the doom and gloom boomers around Bitcoin ETFs. Bitcoin ETFs are a very, very positive development for Bitcoin overall. More people own gold as a result of the GLD ETF than just before the GLD ETF. Bitcoin ETFs are a very, very net positive for Bitcoin. Stop listening to the doom and gloom boomers. Get to your one Bitcoin, because time is running out. I'm talking about, just put this into perspective, 35,000 Bitcoin hoovered up in 3 trading sessions. Not even talking about 3 days, right? I'm talking about 3 trading sessions here. And this is just continuing and continuing and continuing. And at some point, the GBTC sell-off is going to stop. It's already slowing down. It's going to stop. And then we're going to start seeing a reversal, because they're going to start injecting actual capital rather than just waiting for the capital to come out of GBTC. So 35,000 Bitcoin, 3 days. Options ETFs, options on the ETFs have been filed. That's coming in 2 or 3 months. This asset is just going to keep getting mature and mature and mature, and inviting more and more people and more different types of funds into it. And ultimately, there's always only 21 million Bitcoin. So no matter what happens, no matter how much short-term dumpage goes onto the market, there's only 21 million Bitcoin. So if the buy pressure holds up, then that's going to get sucked up at some point, and then the price is only one direction to go. So, but ultimately, despite the options, despite everything else, for you and for me, there are always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.